All right, good morning, everybody. Happy Wednesday. I'm looking at the wrong, I think it's this camera here. Yeah, this one here. Can you guys hear me okay? And we're going to get started here and go through a bunch of good stuff to get this hump day going. If you guys can just quickly confirm if you can hear me okay, then we'll get started in just a sec. All right, perfect. Cool. Let's get started. So again, good morning, everyone. Thanks for being here. If you're here for the first time, this is our Set the Market morning call. I'm Serge Berger from thestudytrader.com. We're going to get this November the 5th going here. And if you are here for the first time, as always, please make sure that you subscribe to the channel, give us a thumbs up, like on all the videos. Of course, if you are here, if you are a returning viewer, thanks for being here. Again, please make sure you give us a thumbs up, like on all the videos you watch. Maybe even leave a comment. That really helps us to be able to continue to do the morning show because the algorithms hopefully will start picking it up. Okay, we'll go through some of the top things on my notepad this morning. I want to talk about yesterday and what we might see going forward in the market based on yesterday's little reversal pattern. We'll talk about the technicalities of it. Then I want to look at the NASDAQ 100, some stuff that's taking place there. And I would like to revisit a couple charts we talked about on Monday and how they're looking today. And yeah, so that's kind of how we're going to go through here today. A whole bunch of stuff, and I think you guys are going to really enjoy what we're going to go through for the next 10 to 15 minutes here together. So let us get started right now. All right. So what we had yesterday, if you look at this screen here with all these quotes and look at the bottom right there where I'm circling with my cursor, you can very clearly see what happened yesterday. It was essentially outside of small cap stocks, which are just higher beta. You can see the reason why the indices were down was because of one thing and one thing only, and that's because of large cap growth stocks. This basically means 7 tech stocks, so you know, we're actually down. You know, I think Apple was actually up yesterday, but for the most part, they were down, and that dragged a lot of stuff down. So again, we continue to see this, you know, the indices very, very much driven by a few stocks. To me, this is very, very scary. You know, I don't know how to manage through this. I think most retail investors don't. They don't even know what they're exposed to. So I'm trying to point it out as much as I can so people don't get caught off guard too much, because they will at some point get clogged by all this. So what this led to as a result is something that technically, like on the charts, we can refer to as an island reversal. And I even made a little video on this morning that you might receive as well. But an island reversal, and I'll just show it to you here on the S&P 500, SPY. But it took place on a ton of individual stocks. It took place on the NASDAQ 100 as well, and so on and so forth. But basically, what an island reversal is, it doesn't happen that often, and we do talk about it actually quite a bit because it does tend to happen. But an island reversal is essentially and it's important to understand psychologically what it means. It's essentially when you have a bunch of price action kind of up here isolated alone on an island. That's where the name comes from. And it comes as the result of an up gap, maybe typically an exhaustive up gap, and then followed by a few days later a down gap. And that's basically exactly what we're having take place here on the S&P, on the NASDAQ, and other places as well. So let me show you this here a little bit more by typing in, using the arrow. So we had an up gap that took place on the 24th of October. then we had an up gap the next day, we had an up gap the following day, and we had an up gap the day after up here. And then we finally had a down gap, which took place on the 4th of November, so yesterday, right? That's this. And so these up gaps in many ways look like they might have been exhaustive, and that really is my concern now, that we're trapped up here. Now, the good news about this from a risk management perspective, and this really kind of what I'm more concerned about than trying to make any sort of doom and gloom forecast. That's not the point. But the good news is at the very latest, and I mean at the very latest, if these levels up here are able to be overcome again, so basically the all-time highs, then we know, and that's at the very latest, but then we know that this on reversal is no longer valid, right? So that's kind of how I look at it. Luckily, we use our momentum indicators, the trender and the trend ruler. If you're part of our boot camp, we'll talk about that again in about not a little bit less than 2 hours from now, for our day 2 in the boot camp. But what it psychologically means is that people got very giddy, chased, but they very quickly got scared and sort of started getting out of those very, very positions. So there's a lot of sort of, FOMO that took place up here. And that's what the chart pattern means. The question, of course, is how deep could the S&P correct? I mean, I wouldn't be surprised if it's literally over for 10 years now, but that's an outlandish call to make. We won't know that until hindsight, of course. But I'm going to say that at the very least, and this is like a complete sort of, talking head nonsense kind of thing I'm saying now, but it is as a next level, not that dumb as a reference point. Just the 50-period moving average, right? That's about 3.5% from here. It's nothing. I mean, we shouldn't have even gone up here, but it is what it is. And after that, you can probably get to the low 600s if we get there. So we have to take this one step at a time. What it means more specifically from a risk management perspective, that it's probably not a bad idea to lighten up in some risk, particularly on these large stocks, tech stocks. Not because they can't go higher, but because I think now people are starting to see that it's and there's so many ways of slicing this, but that they are the market, the index, which is why the S&P is no longer an index. It's just a bunch of tech stocks. Now, there's a lot of people out there that try to make the point that the average stock is gaining strength. I would dramatically differ with that view. What they have done is gain strength off the April lows, but as we talked about on Monday, the equal-weighted S&P 500 is exactly at the same level it was in December. Doesn't mean there's no stocks looking good. That's not the point. But overall, we're not seeing like an incredible amount of strength by other than the Mag 7. So if you look, and again, I have so many charts I could show you. I don't want to make it too long. I don't want to show you the same thing in like 1,000 different ways. That this explains it good enough. So again, I keep coming back to the same issue that I think people need to wear. If this is not about the economy falling apart, although it's not, it's weakening, right? The labor market is certainly proving that to us. It's not horrible. This morning's numbers are okay. But it's weakening. We see it with consumer stocks. We've been talking about the stocks like Chipotle Mexican Grill and Starbucks, and we even had a McDonald's report this morning. They were talking about a challenging outlook. The stock is up here in pre-market because why not? It's a stock, and people like to buy stocks. But the consumer is somewhat challenged, and it doesn't matter until it matters. What does matter, I think now, is again this high concentration in the indices. So there's a very big difference between saying the economy sucks, which I'm not really saying, and a structural problem or structural risk. I don't want to call it a problem. It's just a risk that I think people need to be aware of. Now, let's talk about gaps real quick. So if you're part of our Trade Ops members area, you know that I keep talking about, and I show you guys every morning, those gaps, right? And those are the unfilled gaps. And I talked about this, and I think I even talked about it last week or so in one of these Set the Market sessions. And I talked about how when you have 3-4 up gaps in a row, so these were those up gaps I showed you before in the daily chart. Here it is on an intraday level, right? They ultimately get filled. And sometimes when you have 3-4 up gaps like that in a row that seem very exhaustive, they can fill rather quickly. So for example, the up gaps from the past, since basically the 24th of October, we've now had let's call 2 out of 3 filled. So it can happen rather quickly. That's the same thing I showed you before on that island reversal chart. So I think that's not something I would want to ignore. Then we've talked about the warning signs from the crypto world, right? Bitcoin on top in blue, Ether in red, and of course Dogecoin there in purple. And these are just things to understand. So when those risky assets, the ones that are most sensitive to liquidity, when they perform poorly, it's usually a matter of time for the NASDAQ and some of these other risk assets to be trading a bit weaker. So I think from a risk management perspective, this is important, an important juncture. I would not ignore this. So just keep that in mind. Next up is a couple charts that I wanted to show you. We're seeing more job layoffs as well. Over in Japan, we actually had SoftBank had a pretty interesting down day overnight, and that's very much looks like the S&P, the NASDAQ or the S&P 500. I'm just showing you this to show you that this is not just a U.S. phenomena. You see a lot of these companies that are basically levered trades on some of these Max 7 stocks, how they're going to react in kind with a hiccup there. Quick comment on Palantir. I don't have a whole lot to say on this company other than I think it's a bit scary to be blindly long. If you are using our trend following model, that is the market rover, I will point out that the stock remains very much in a green bullish trend. It has been in a bullish trend for something like 1,600%. So basically turned into a bullish trend in January, or was it June of 23. It's now up 2,200%. My apologies. So I think everyone should be quite happy in that. So the trend hasn't changed, right? So the only thing that could change at some point soon, and I say could because it hasn't yet, is the momentum. But if you look at momentum, so you look at PLTR, for example, from our momentum indicators, this is the trender indicator, you can see we are still technically in a bullish momentum move. We don't yet have bearish momentum, and I don't know if we get it anytime soon, but that's what I'm saying. We're watching this very closely. So even though we've had, Palantir was down, 8% yesterday, something like that, it's a blip at this point, right? Before we can make any real statement about what the state of the stock is over the next sort of near to intermediate term. We need momentum to change first. Again, trend is nowhere near over. It'll take a long time for this trend to end from a trend following perspective. So I would grade yesterday's sell-off as a an A in terms of scaring people. I don't know where it's going to land in terms of how long it actually lasts. What I continue to be concerned about is this issue that I think most people are very, very convinced that we're going to see the market rally between here and year end. And I just don't know, right? I do not have an answer. I'm concerned about how people are convinced about this, which is exactly why we use momentum. And I will give you one more freebie here. Gold, by the way, now has a momentum sell signal. Momentum is short term, right? We had a momentum buy signal on the 25th of August. The GLD ETF then rallied as much as 29%. And we then, of course, scaled out of it, as you guys remember here in the morning call. And now we have a momentum sell signal. So it's just a signal, no emotions, no feelings, just a signal. If it works, great. If it doesn't, so be it, right? We've had a hell of a last signal, and now we're seeing if this one might be something going forward. My colleagues Joel and Christian are here as well. So if you have any questions, please let them know in the chat box here. Christian brings up today's session on finding extremely overbought and oversold stocks and how we can take advantage of that. So if you want to go ahead and learn in this week's educational series, we are doing a session on how to find extremely overbought and oversold stocks and how we can put on trades in those kind of situations, like Newmont Mining, for example, when it got very overbought, or gold for that matter too, a couple of weeks ago or so. Those are really juicy opportunities, and we'll show you exactly how we find those. So you can click on that link that Christian put in there. Let me quickly show you here. Go to this link that Christian put into the chat box. You can sign up for today's educational session on that. It's free. It's just a question of you signing up. Jeff is asking, any correlation between energy sector and a possible mean inversion in Max 7? Very possible. Very possible. I continue to warn people that. Let me try to answer the question in a different way. Jeff, why do you think gold was down yesterday? Gold, the GLD ETF, was down 1.75% yesterday. Is it a Max 7 stock? Not last time I checked. The reason gold is down is because people got margin calls on their Max 7 bubble stocks, right? So they got margin calls, and gold is typically one of the quickest things people raise funds from, right? That's historically been the way it worked. So gold is sensitive to margin calls on Max 7. If gold is sensitive to that, you better believe energy is, right? So that's something to keep in mind. Yeah, Christian. By the way, you made a typo. If you could put that link in again. It's HTTPS. Thanks for pointing that out, William. A very good point. Christian, if you could type that in again, HTTPS, and then the actual link to the thing, that would be great. Okay. Okay. Well, listen, we'll leave it at this. If there's any other questions, by all means, let us know. We'll be back here tomorrow morning with our set the market call for a Thursday tomorrow. We skip Fridays for the set the market morning call because I typically have a lot of calls to do. But we look forward to seeing you guys there. Again, in the meantime, if you want to join us for this week's educational series, I think Christian's putting in the link once again correctly this time. So we look forward to seeing you guys in that session as well. Have a great start to your Wednesday. And if you're a bootcamp member, we'll see you guys in about an hour and 40 minutes or so in our day 2 of the bootcamp. And thank you, Doug, for reminding. Please hit the like button and subscribe to the channel as long as it's still free. And we'll see you guys back here tomorrow morning. Thanks for being here.